Alright, hey everyone, this is Scott here again with a new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And for today's video here, I wanted to talk about the 3 biggest mistakes that I made when I first started to trade options. And I wanted to make this video because hopefully by understanding the things that I did wrong, that will help you avoid those same mistakes and that will accelerate the process for you of becoming a profitable or more profitable trader. And so before diving in here, for those of you who are new to the channel, I just want to let you know that I do also teach on SKILLSHARE, where you can take my very in-depth classes on options trading and stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for SKILLSHARE using any of those links, you'll get a 2-week free trial. And so now diving in here, the first big mistake that I made when just learning how to trade options was not taking on enough risk. And this might sound a bit counterintuitive because, typically when you think about a new trader and some of the common mistakes they make, it's usually they take on too much risk and then they blow up their account. And believe me, that's definitely a mistake and something you want to avoid. But in my case, I was actually taking on too little risk. And so specifically what I was doing when I was just getting started is I was pretty much only selling $1 wide credit spreads and iron condors. That was pretty much my entire trading strategy at the time. And what I didn't realize was that those tiny $1 wide spreads made it pretty much impossible to actually make a profit long term. And so let's think about why here for a second. If I sell a $1 wide call credit spread on some stock, and maybe I take in $30 in credit for doing that. And for me, I typically take my profits at 50% of the maximum. So the maximum possible profit is $30. 50% of that is $15 would be the profit I'm trying to make on that call credit spread. And so let's say I made that profit, I made my $15, and then from that $15 profit, I have to take out my commissions. And for TD Ameritrade here, they charge 65 cents per contract in commissions. So that would be $1.30 in commissions for putting on the trade, and then another $1.30 for taking off the trade. So $2.60 is my total commissions for that call credit spread, and that comes out of my profits. And then after that, I also have taxes to think about too. So really when you get down to it, I'm left with just a few dollars in profit on my $1 wide spreads. And that tiny amount of profit has to be enough to compensate for my losses as well. Now with high probability options trading, selling out of the money options, you will win most of the time. That's a good thing, but there are going to be a few times where you actually lose money. And in those cases, if they're max loss scenarios, which is most likely going to be the case for $1 wide spreads, then like I said, those tiny profits have to more than compensate for those losses. And so point being here is long term, it's going to be virtually impossible for me to make money with just $1 wide spreads and $1 wide iron condors. It's just not enough risk. The profits are not big enough to actually compensate for both my losses, for commissions, and for taxes. Now that being said, before I move on to my second point here, I do want to say that $1 wide spreads are great if you are literally just getting started and you just want to get the feel for options trading. Right, maybe during that initial phase where you're just getting used to your trading platform, you're making your first trade and you're just trying to figure out what the heck you're doing, $1 wide spreads are great for that time. Because in the worst case scenario, you're only going to ever lose a very small amount of money, and that's not a big deal. You can basically think of it as tuition, the cost of learning how to trade, right? So $1 wide spreads are not a problem when you are literally just getting started. But just keep in mind that as you become more confident in your trading, and you have a better grasp on what you're doing, you're going to need to take on more and more risk to actually make profits long term. And so what you can do there is either widen out those spreads, maybe go $5 wide or $10 wide, or you could also go the route of selling naked options. And you'll have to get approval from your broker to do this. It's not that hard, so don't worry. But you could also start selling naked options, strangles, straddles, naked call, naked put, something like that. Because ultimately, the way financial markets work, if you want to make money in the stock market, you have to take on some amount of adequate risk to actually eke out a profit. There is no profit without risk in financial markets. And if your risk is too small, it's just not going to happen. And so now the second major mistake that I made was not having a very, very clear set of mechanics and rules to trade by. And this mostly became an issue for me once I got approved to sell naked options. And that's because with those kinds of positions, you have undefined risk, right? Before that, I was just doing credit spreads and iron condors. So in the worst case scenario, I already knew how much money I could lose. But with a strangle or a naked call or naked put, there's no way of knowing upfront how much money you could lose. And so before I started selling naked options, I failed to lay out a very clear set of rules and mechanics that would tell me when I should cut my losses, when I should take profits, when I should make adjustments, etc. And actually there was a time once I got that approval where I was making pretty decent money. I was selling strangles and naked puts and naked calls, and all my trades seemed to be working for a time. But it only takes a few trades that really blow up and move against you, and at some point that will happen, where if you don't have strong mechanics to handle those positions, all your profits are going to go away. And so specifically back in June of 2020, I believe, there was a period of time where airline stocks and cruise line stocks were basically doubling and tripling in price. And I had some strangles and some naked call options on those kinds of stocks, and everything just got blown out. But if I did actually have a clear set of mechanics and rules back then, that would have told me when I should just get out for a loss, even after making adjustments, and just go find a new trade, then those few losing positions on those airline stocks would have only made a very small dent on my portfolio instead of a crater. So bottom line here, before you ever hit confirm and send to place an order to open a trade, make sure you know exactly, and I mean exactly, when you're going to take your profits, when you're going to take your losses, and where you're going to make your adjustments. Have all three of those things clearly laid out before you ever make the trade. And finally, the third biggest mistake that I made was setting profit goals. And by this, I mean, let's say for this year, 2021, I want to make at least 25% of my account. That's my goal. Now, I'm not saying it's bad to have a general target in mind, but setting that as my absolute goal, I have to hit this point by the end of the year, otherwise I'm going to be discouraged or disappointed, I failed, whatever it is. Do not do that. Do not make those goals. The reason being is that it's impossible to accurately predict what your returns are going to be like by the end of the year, or what the market is going to do by the end of the year. It's impossible. And so because of that, if you're always focused on that 25% goal, or whatever your goal is, and you're either falling short, or maybe you are exceeding that goal, it's going to screw with your head. And one of the biggest things that I've learned about trading is that there is absolutely no place, and I mean no place whatsoever, for emotion. And so if you are lagging behind your goal, for example, you're probably going to get frustrated, angry, and you might start to make trades or make decisions that are going to be way out of line with your trading strategy to try and make up for you being behind on your goal. And then conversely, if you are currently exceeding your goal, maybe you're on track for a 50% return or something for the year, then at that point you might get cocky and you might start getting lazy on your mechanics. You might start taking on bigger and bigger risk for your trades because you think you have the secret formula or whatever, but at some point the market's going to move on a dime and all of a sudden you might find yourself now behind your goal. So honestly, I would say do not have a profit goal by the end of the year. Just focus on your current strategy, whatever that might be. Make the best trades that you can make, stick to your mechanics, and the profits will take care of themselves. And then as you are making trades over the months and years that you're doing this, if you find yourself not satisfied with the outcome, with the results, well, then along the way you can tweak the process and make improvements or adjustments to your strategy and see what the profits are like going forward after that. And so I personally think this is the best way to go about your trading. Just focus on your current strategy and just see what kinds of profits come with that strategy. And once I adopted that approach to trading, it was a lot easier to cope with my emotions because I didn't have some all-important goal that I had to meet by the end of the year, otherwise I failed in some way. And in fact, because I was then able to stay purely mechanical with my trading, trying to be as robotic as possible, my returns, my profits actually improved. And so that's going to wrap it up for this video. Those were the 3 biggest mistakes that I made while learning how to trade options. And so I hope you found this video to be useful, and now your job going forward is to obviously avoid those same mistakes as much as you can. And definitely let me know your thoughts or if you got questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading and stock market investing, then check out my SKILLSHARE courses, links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every Monday, Wednesday, and Friday, and you don't want to miss out. So thanks again for watching, and I'll see you next time.